Hey, this is Elliot Wave Sage. Want to do a quick market update. Like always, none of this is financial advice. Always do what's best for you. So I'm gonna yeah, I had a chance to do another quick update just to show where I think we are. So in the Dow, we had this mini flash crash. What was surprising is we actually closed on the lows on that. Actually, I was thinking about that. That was actually a really good opportunity to get long. Trade in against some key levels. You could have done that, like against this level here, and in the Russell against this low here, even better. So those were opportunities to get aggressive, but a lot of people didn't do that. And so yeah, the move, they've missed the move, they've missed this part of the move, they've obviously missed this whole part, and they're mad. So just you have to be mad at yourself, right? You have to be mad at yourself. You can't be mad at other people for how you trade. And the thing is, there's always a new opportunity. So will there be a sell-off in the future? Sure, there always is. And there's always a pullback, like you saw here. And like I keep saying, above 453, every dip, every pullback, every flash crash is going to be bought up. That's how I would look at this market. I wouldn't even worry about Elliott wave counts or anything else. I would just say above 453, the bulls are in control. Any three-wave pullback is a buy-in opportunity or intraday flash crash if you get something like that, which we did get that one day. Uh, so here we are. So now the Dow Jones is up in 5. It should this move is ended. We should be pulling back in this wave too. Maybe to start the new year. Maybe it could be today, but that's where I think we are, wave 2. And then here in the SPY, we could still be in 5, but should be in a 2. The triple Qs are in a 2. With aggressive, if you're aggressive, you can buy against this wave 4 low at 410. 410. So that's an opportunity. And then the Russell has another one if this is a shallow connector dump to 201 again in a 1-2. So we're obviously should be selling off today. But we should be in this wave 2 for most of the first part of the trading day. So it should be relatively weak trading or a red day today, and then next week some big news event is going to happen next week, or maybe even the week after, but probably next week to get the 3 launch into these shaded areas that I have here. And I can't tell you what it is, but something very exciting in the market is going to happen that everyone is in position for in this 1-2-1-2 setup coming. That's what's coming here. 1-2-1-2 setup, and then we'll see where we go. So there's obviously some nice data on the horizon, and I do think January may not be as bearish as people expect. I believe the bearishness comes into the market mid-February time frame around there, which is what I've seen historically in the past, except for a few exceptions. So here it is. So we are in this wave 2. We could start to drop, and then perhaps another way the market tries to trade, shake people out before this bigger move is we do start out next week, with a very big sell-off, but this lows respect it in this 1-2-1-2. So we could still get this flush, but this is just a great opportunity to go long as long as the SPY stays above 453, or I would say even 467. But because if it breaks 467, then this count is negated. So yeah, you probably want to be more conservative up here and say this is, so you put your stop at this 467 level where you have this support. If that support breaks, because more than likely if that breaks, it's a beeline down to 453. And then if this were to break, then I think that's when the market unravels quickly and the panic really sets in. So I do think that's the way to trade it. So So that's my thoughts on the market, guys. Short term. Bitcoin is, I'm looking at this count right now, a WXY. We had the first W finish, the connector, and now we're in the final leg. So it looks like Bitcoin also needs like a little bit more of a flush, and then could represent another opportunity coming. Gold, I warned you about the 5 waves finishing in this connector. We needed to take out the 288, 290 level here to negate that, and it didn't do it. And now it broke trend. This could be just a nice bearish wedge here that's now breaking down. And so the new target for gold is the low 1900s, which would be a massive opportunity. And this actually matches our GDX count perfectly. So it's nothing to panic about. But if you did FOMO in, you're just going to have to hold through this. And you're just going to have to, learn from your mistake. If you FOMO in. Now, if the market could come back and take this high out, then I think you have a 1, 2, 3, 4, 5. And then to me, that's the low. You'll get 5. You could get another pullback, and then you want to get long. And silver's doing the same thing, but in more dramatic fashion. Again, finish the connector, and it should be heading down to this 21. A great opportunity, maybe the final chance to get long this metal with a great small risk, high reward area. So this would be a great opportunity. Come in potentially in the metals to get long. Natural gas was interesting. Like I said, it's playing games. I knew the shorts are finally like running out of time, and we did have a nice reaction. Boyle really was profitable yesterday. Nice trading day in Boyle. The 1-2-1-2 played out, and so I still looking at this like a 1-2-1-2 again. The bears are finally starting to lose control of the natural gas market. I think it's just so bearish, so negative. It can't get any worse. I mean, people were saying on TV the other day it's going below $1 per therm. I mean, these guys. So this is. The sentiment can't be any more negative than it is. Bigger picture on natural gas too is it did hit our buy area for a long-term hold, which my videos mention. Not for the day trader, but long-term positions, especially in the producers here. And then it came back, it tagged this demand area, and it bounced pretty nicely. So I do believe this is a bottom forming, a long-term, maybe a multi-year bottom in the gap, and it's just going to take time to play out. So we could still see a run, a pullback. But at some point we're going to get this breakout. And once we hit wave 3 of 3, we're looking at bigger picture. We've got a 1, a 2, and then 3. And yes, these are the areas we could be coming to for that wave 3. In Boyle should easily be in the triple digits or more when we're up in these areas. And this has to be super negative for the stock market. This has to be part of the rug pull scenario. When natural gas pumps finally to these areas, more than likely rates make that push higher that I keep talking about, and the market has the rug pull. And there's probably this inflationary impulse. So what I'm seeing is I think underneath the hood of the market, the commodities are starting to get going. The pumps being primed, and you're starting to see that. So this is on borrowed time, because I do think when this finally runs out somewhere around here, the commodities will be the money will shift out, go into commodities, the inflation will take over, then everyone will be saying, oh my gosh, he's off for Burns, look what he did, what a fool, and inflation takes off, and then your nat gas goes parabolic, and then you've got your gold and silver jumps, everything commodity related. It makes a comeback. I don't know. I'm just speculating how this could play out. But I'm looking at these things, and then dollar index keeps getting crushed. But like I said, we're coming in this connector wave. So we should be bouncing soon. You would think this would be more negative for the market, but if anything, it could be negative for Bitcoin, gold, and silver, which is what I expect. So this makes sense with those. Gold, silver, Bitcoin going down. The VIX is it's just so weak. People just aren't afraid, and there really is, no known news event on the horizon. It would have to be a complete black swan to destroy this. Uh, but you have to respect the fact that um, these are the areas we can get to down here. It's just the way it is. Now, this VIX looks like it hit 5 down. It looks like it wants to come back. So again, I think we're in a wave 2. I think we have a short. If you're a short-term day trader, I think you got to expect this wave 2 coming. And maybe it's not today. Maybe it's the next week of trading. They try to do this and really scare people out of the market. Maybe they drop the Dow down 500-600 points. But I do believe that's about all you can get. But I do think we're entering that time period, and the VIX may spike again. So it'll be interesting. It'll be interested if we get this too. This is what I'm looking for. This too. All right. Someone had some quick request. I'll do that. Btbt was a question. We nailed the bottom of this, guys. By the way, if you followed me, literally the day it bottomed, we got in on that. Now, obviously, you have to be a good trader to hold through the whole thing, and and really believe in it. So now where is it? So look, you made a higher high. So right when, I don't even have to do any labeling. I look at the move, and you made a higher high. So there's definitely more room to the upside now to go. And before I even introduce any Elliott wave count. So I'm looking for at least $6-7 now on it. This would be the new supply zone. And honestly, if you look here at it, you've got a divergence here at the top. So it's a nice impulse. So that definitely predicted the next move higher, right? A nice impulse, a beautiful impulse with a pullback. And now we're entering a wave 3 moment. In wave 3 it could even hit 9. So hard to say where I think you probably could just put the bottom here. Where's the lowest wick on this? Probably right here. That looks like just a real messy wave 2, something like that. But it's obviously extending. So one, two, yeah, something like that. I won't even label it. So that's what it is right now. And if it could break 9, then it's on its way to breaking the all-time high at 33. As unbelievable as that sounds. It's coming up against massive chart resistance here, right where I got this line. So it may wick and wick back below this. I wouldn't be surprised to see it trade above it and then crash back below it to finish this wave 3, or make another 1-2 to have a 1-2 1-2. So it is, let me draw this a little bit better here. It's highly unusual for it to go through this massive resistance, this chart resistant so easily. Now, I mean, it's not impossible, but look for that back test potentially as another entry point to try to play that back test against 465 to get in on that for that run here. So the other thing is it comes in and it wicks and it just boom, it comes back below it. If that happens, then I'm looking for a 1, 2, 3, 4, 5, and then we'll pull back in wave 2. But this would be a massive opportunity if that were to occur, because you made the higher high move, the higher high move. But it is interesting that it cut through this resistance like butter. That's very bullish. Okay, so that's that one, and then the other one was Caravana. It's funny about Caravana. Caravana, had a 3-wave pullback here, and it did hit a buy area. And I was thinking about pulling the trigger on this when I was buying some stocks about a week, when this, about a week ago or whatever, when this was here. And I decided not to do that because I look at Caravana and I look at this chart pattern, And again, it seems like it's going to break out, right? Interest rates are probably going to go down. People are going to buy cars. Pent-up demand is going to come back. So it should do okay. I mean, this is a massive inverse head and shoulders. Now, you had a false breakout, and now it collapsed back in. Typically, when you have a false breakout like that, it has a bigger drop associated with it, a bigger shakeout. So I'm a more conservative trader. If you're an aggressive trader, you would buy it here, and then you would put your stop loss at 51.80. Right, you would buy, and then that would be your risk, and your reward would be, Caravana in the triple digits or beyond. Probably up to 140. Yeah, probably up. My guess somewhere up into this 120, 130 area is where it would go. But if rates start dropping, I think people are gonna it kind of gives these kind of companies a lifeline. So here we are in this wave. So I would rather buy it not here, but then if it can make another leg lower in this upcoming wave 2 in the market down to 46, 43, this would be a less risk with a higher reward potential. So I kind of like this setup a little better if it were to do that, if it can pull that off. So the other alternative is this here. If you look, you've got a 1, 2, 1, 2, 3, 4. So this looks 3 wave-ish to me. So because of that, I wouldn't be surprised to see a bounce here and actually try to come back up to 64 and then have a massive pullback down into this area that I have highlighted in the high 40s later. But I don't like that because it's correcting the whole cycle. So the other thing, since it's correcting the whole cycle, if it is an ABC corrective move, this could be a flat. So that's another reason why I don't like buying it here, because it could be a flat still. And if this is a flat, then we definitely will reach these targets, but we could even reach even lower targets, which is where it's something like this. Something like that. So that's why you have to have a stop loss if you're going to try to dip buy this. So I don't like trading it, and that's why I personally didn't buy it. But you got to do what's best for you. If you're in it, it made a higher high. And anytime you make a higher high after a correction, that means in the future it's going to be up here. It's going to be up here. But this is going to be the game. Are you going to get a rug pull like this and then get this pump? Or is the market going to give you a 5-wave move, right? A 5-wave move like this, and then pull back to get in? Or is the market going to do something where we don't have to count right, and it's already over? It's already over. And then it just goes parabolic. Which is the aggressive trader. So the aggressive trader would buy here with a stop loss at 50 for 52, hoping for that. The cautious trader like myself is playing for either the 5-wave move, pull back into the high 40s, or it's something like this, and we get a deeper retrace down to the wave 4 cluster at 48. That's how I'm looking at it, and with a stop at 45. And you have to use a stop, because if it breaks that 45 stop, then it's the flat, and then it's going to unravel down into the $18 level. So you don't want to lose all your money. So this is a tough one to trade, but perhaps you can get a pullback, a deeper pullback, and then just try a long position with very little risk at a 52 stop loss, and just maybe try your luck at the casino and see if you get this 1-2 setup and you go and it goes parabolic. I mean, I can't see that happening personally. I mean, I don't know. The car market doesn't look that great, right? I mean, rates are high, and I mean, there's all these specials now on cars and stuff, discounts, and if you really look at Caravana's like fundamental, like the Reddit and all that, a lot of people regret using it. Like they're not like very popular with the customer. A lot of poor experiences and shipping issues, and so I think something to get Caravana pumping like that. It's got to be like Paul coming out going, yeah guys, I cut rates today. And then once that signal comes, I do believe the Caravanas of the world are going to go back to where they probably were, because people are going to price in like everything's going back to normal when it probably isn't. But they'll buy it anyway, thinking that now. But anyway, that's a long talk on Caravana, guys. We can look at the tech stocks real quick too. I know everybody loves the tech stocks. So Tesla was down today. So we did hit the target, almost hit my 272 target. It still can get there right here, 272. And this got like a moment of truth coming, a moment of truth. I mean, this is clearly 5 waves up with a connector here, 1 2 1 2. So yeah, this got more upside. In fact, this is setting up to actually break this 272 level. So you can't get too bearish on this, guys. You can't get too bearish on it because of the count I'm looking at. I'm looking at a count like this. Now, you could make an argument that's just 3 waves. So then it's 3 and 3 and 3, and it's done here at 265. But I think there's a lot of divergence here. There's a lot of divergence here, and even at this peak to this peak. So this is why sometimes Elliott waves isn't precise, and you have to use other indicators, and then you just form your best opinion on where you think it are. But to me, it looks like 5 up, right? With the RSI crutch I use, and then now you need, for a corrective move, you need another 5 up. So you have a 1 2, and appears to be another 1 2, right? Now the other alternative is still 2, and it flats out. So I'll give you guys a setup on Tesla. If it flats out on it, you're looking at 242, stop loss at 235. So that's how I trade it for a long position. Go long at 242 if it could do that. And that could be a back test of the downtrend line that I've got here. This could be this back test of this downtrend line for this move up to finish out the either the corrective bounce or the impulse off of a major low again. And so here we are, the target 286.300. It would break this massive downtrend line, which is very bullish. I know people don't think that is. They just say, oh, the trend line can extend, but I don't trade that way. But you have to do what's best for you. So this is a possible setup. The more bullish setup is a 1 2 1 2, and there's really nothing I wouldn't buy that. I would look for something like this, so, which matches more what the market should be doing. Bitcoin selling off potentially, so something like this. That's a Tesla setup. How's Apple doing? Yeah, it hit the buy area. It's bouncing, guys. If it takes out this peak, then you have 5 off the low. This would be a wave 5. It may get to 208, 210, and then that would be a 5-wave impulse off the low. And it would negate the bearish count, which makes sense because now that the Dow has made a higher high, more than likely, big tech will pull back in a big wave too, when the market rug pulls. But I don't know if it will ever break this low that I have down here. We could still be in something like a 1 2, and then finishing up another 1 2 here. Let's see if I can draw this right. Make sure I could get this right for you guys. Yeah, something like this. So it could be this Apple could be this up into 210. So that's why it makes this new high and then and extends. If it doesn't do that, then the previous count is valid, the more bearish count. But it, if the market's going to go to SPY 500, then you could see something like this. And then look, there's a lot of room to the downside from here all the way back down to 162, 159. And I do believe this will eventually happen, just like I have it, somewhere around 150, maybe even 152, 151. But as you can see, this needs, we want to take that out, because the reason why this is 3 waves, so I wouldn't call it 5 here because it's only 3 up off the low. But if you can make that other high, then you're talking with Apple something like, you could do something like that, which would be really a weird count. The other count I would like better is something like this, where it extends in wave 5, something like that. But it doesn't matter, it's irrelevant. It could go in wave 5, and wave 5 can hit all the way up to 206 to 212, or probably around 210 before this pullback. This pullback, which would be the rug pull and then the indices. Adobe's looking weak. Okay, so Adobe may be presenting a setup opportunity, guys. I've been keeping an eye on it since its earnings report. I was hoping to get another leg lower. If we may get that at 557, 522, somewhere around here. So keep an eye on Adobe. AMD, again, guys, I told you, I wouldn't be surprised to see it at 190, 200 and finish this move, this 3-wave move. Trade desk is still pretty weak. Looking for a lot of chop. I want to see this pullback here, and why? I want to see this. We'll see what happens on earnings. The other count would be, this is the low here, and it's like a 1-2, 1-2. So we really want to keep an eye on this downtrend line for trade desk. If we can break through that, then you got to go with the more bullish count. But right now, this one looks like, this is the bearish count. It looks like just something I wouldn't trade or entertain buy-in or short-in. Really like to get DraftKings on another dip lower, although it did hit the buy area. And 3, I'm hoping we get a shallow connector and we get another dip lower to get long DraftKings again. All right, how's our GME and Fubo doing? GME could be on a wave 4 here, and it needs like a little bit of a wave 5 and then get another pullback. So it may still need to take some time. Now the more bearish count is it's only 3 up, and then it's an A, B, C, and it comes back down to this area down around 1624. We'll keep an eye on it. We'll see if we can get this wave 5. The more bullish count, of course, is a 1-2, 1-2. We are, it looks like, correcting the entire cycle, so it even could be it could be tight here, something like that, at a 1-2. So that's why I'm just going to hold it in the area here. Just going to hold it. Our Fubo TV, 1-2, 1-2, and again, they're trying to push this down. It's just tough in this environment because everything's melting up. We'll see if they can make this into a connector for more downside. So you have to respect that potential. So just keep that in mind if you are in it, that it could make a pretty big leg lower to 274 if this is a shallow connector for this 3-wave move. So use your stop losses if you're in it, because this could be 3, 3, and we get that to 275. So just know that just like we saw with all these stocks on these corrections, uh, they try to shake people out before they run them, especially like a Btbt. All right, that's all I got today, guys. Good luck trading. I'm looking for a wave two in this market, and then we should come out of that with more upside, and then sometime in 24, late mid to late Q1, probably around mid February, late February. My guess, best guess, could even be early March, but somewhere around there. We get the real rug pull and the panic, and that may be the time when the inflationary impulse reemerges in the market, and that's when the stocks like the natural gas and moons and all these other gold moons and silver moon, all the inflationary, and then Powell goes has his oh crap moment, and they made whoop, my bad, we can't cut rates, look what we did, oh my gosh, what an idiot, and I'm Arthur Burns all over again, fell into pressure, and now he's got a big old mess on his hands. That's the scenario. The other scenario is nothing related to the economy, and it's something to do with the election, and then it starts to emerge. This Trump-Biden standoff is going to be more contentious and more volatile than anyone can imagine. A wild card comes in, a third-party candidate, something crazy that spooks the market. That is what to get a sell-off like to the 320s. That would probably be the reason, because I do think. If you play this out, take the economy out of the equation and Powell out, let's just say they do everything right and everything's perfect, but then it looks like Trump's going to win in a sweep. He's going to win in prison, whatever you want to say, he's going to win. You say he's going to win, and then he's going to be, spewing rhetoric about payback, massive payback, and there probably will be massive, like, some type of payback coming that he'll do, and the market's going to panic like you never believe, because they're going to be like, what do you mean payback? What do you mean? Oh my gosh, this guy's going to go, and then if you get and then if it starts looking like MAGA's going to take more seats and win that Senate, and it could be a clean sweep, a right wing sweep in the United States, I'm willing to bet investors are going to be panicking, because for the most part, I mean, let's just face it, guys, most institutional investors aren't Trump fans. The guys that control, the George Soroses, the billionaire, the Rockefeller, all those people, I guarantee you they're not voting for Trump. And so they're going to panic, because they're going to say, oh my gosh, that's not our guy. This guy, we can't control him, and let's just put our money on the sidelines. And they're going to panic out. I think they will, and I think they're going to drive this market down. Because they're going to be afraid, and then I do think when Trump comes in, if this happens and there's like a sweep, there won't be the payback that everyone feared. But remember, Trump loves the stock market, guys. If Trump and those guys win, he literally checks the indices every day like I do. I mean, he literally judges his daily performance on how the indices trade. So I guarantee you he isn't going to let the stock market collapse. He'll do whatever he can. So I do think that's just like we saw when he won before. That was a big sell-off. I do believe that's what will happen. That's the political side of it. If the political side goes well, then perhaps Powell does lose control and inflation comes back, and that would also do it. So I think there's two viable scenarios for this rug pull sell-off going into 24. Those are the two. And maybe a distant third would be you wake up one day and China invaded Taiwan. And I think that's a long shot one, but that would be another calamity that the market would just essentially collapse overnight. So that's another one that's always out there. That's always a risk. You wake up China's all over an island of Taiwan. They took it over, and they're taking control of the semiconductors there. The market's going to go freaking crazy to the downside because they're not going to understand it. But in the end, I think, again, the world won't come to an end. It won't be such a disaster. These things never are. And then, maybe the SPY will be at 320, but it won't go to zero. So that's how I'm thinking, guys. Good luck trading. Talk to you guys later.